Hello, and in this video I'm going to show you why the Home Depot is a stock you should be considering adding to your portfolio. We're going to run through the historic prices, we're going to take a look at that dividend safety, and then we're going to run and look at the stock valuation system, if it's undervalued, the intrinsic value, and what is our acceptable buy price. I'm going to run through why I like this stock, and we are going to take a look. So let's jump straight in. So as we can see, over the last year, Home Depot has been down 2.6%. If we take a look at the 10-year graph, however, look at that extraordinary 304% growth over the 10 years. I always say you need to be investing if you are looking for the long term. There should be no day trading if you are a dividend growth investor. And if we take a look at the year-to-date performance, it is down 5%. So currently the yield is just under 3% at 2.78, and the market cap is 304 billion. Now, if we take a look at the dividend safety, it has an 87 score, which means very safe. We want to look at the growth, we want to look at the yield in more detail and some more metrics. Now, this is something that for me is a big green flag. The latest growth of 10%, double digits in February, last 5 years 16% dividend CAGR, and the last 20 years 20% compounded annual growth. So that's beautiful to see. We can also see that the 14 years of consecutive increases that Home Depot have had, and they have paid dividends for the last 35 years without a reduction. So that is beautiful to see. Now, dividend yield theory states that a stock is undervalued if the yield is above the 5-year average. We can see it's at 2.78%, which is above the 5-year average of 2.33. Another green tick. The sector P comparison is 19 for Home Depot, and the consumer discretion is 13.8. I wouldn't look too much into this personally, as I like to compare these against the S&P 500, which is around 22, so this is right below that. So for me, again, another big green tick. The forward P is also below the 5-year average, only slightly, but still, again, these are all positive ticks. And the 52-week price range is sitting in between the 52-week low of 266 and 339. Now, as always, we don't look at any of these in isolation, and we want to take a look at the whole picture. Earnings payout ratio, again, I put this here just for investors who like to see this, as I prefer to look at the free cash flow payout ratio. I like to see below 60% on both metrics, and on the earnings payout, it has been below that 60%. The reason why I like that is because it means that Home Depot can continue to pay that double-digit dividend increase, which is lovely to see as a dividend growth investor. Now, the free cash flow payout ratio, again, has been below 60%. If we look at 2023, it's been around 69%. And the forward looking is 50%. So for me, I can look past that 69% in 2023. And again, another green tick. So all good. Now we look at the sales growth again. This is just beautiful to see. One of the reasons why I've wanted to drop this video, because I do believe it is an underrated stock that sometimes does go below the radar. Look at that. You tend to see 3 to 7% growth for steady businesses. If we look at this, we can see 5% in 2014. This is trended upwards. If we look at 2021, 20%, and then back down 14% in 2022. So for me, this is very positive. Slightly lower than normal with 4% in 2023, but when we look at the graph below, we can see that uptrend over the last 10 years, and that has essentially doubled from 2014 to 2023, from 78 billion to 157 billion. So again, very positive. If you are liking this video, smash that like button, smash the subscribe button, as I will continue to plow these videos out. Another really amazing thing that I like to see is companies that buy back shares alongside paying double-digit dividend growth. Now, it's gone from 1.43 billion shares outstanding to just over 1 billion over the last 10 years. Another very positive metric. Return on invested capital, I'm looking for 10% plus here. We're seeing well above that 10%. So I can't really say much more than this is another green flag, green tick. Operating margin, free cash flow margin, we've got above 12% as our preference for operating margin and above 5% for the free cash flow margin. And, it's done well above that, and I would say another green tick, so another positive. Do let me know in the comments your thoughts so far on Home Depot and whether or not this is a stock you have in your portfolio or you are looking to add. Finally, we look at the net debt to EBITDA, earnings before interest, tax and depreciation. Below 3 is the preference. This essentially says that in 2023, it would take Home Depot 1.66 years to pay off all its debt net of cash on hand. So this is all positive in my opinion. One thing that for me is probably a red flag and something to look into further is the fact that they finance the majority of their business through debt rather than equity. In 2023, this was around 97%. However, it's something that I would just purely look into. As we can see on the left, they are able to pay that off, so it's not as big of an issue. Now, finally, we move on to the interesting part of the show where we look at the valuation. Is Home Depot undervalued? What is the intrinsic value? And what is our acceptable buy price? Like I said, this for me is a stock that should be added to your portfolio. Again, not financial advice and purely for entertainment. So let's jump into Graham's valuation. I have a video where I explain how we incorporate this into the valuation and how you can copy this and come up with your own model. Now, jumping in, the EPS of Graham's valuation is of Home Depot is $16.69. And the growth rate based on analyst estimates is around 10. We've inputted the current yield AAA corporate bonds, and it gives the valuation at $275.59. Just showing you here, just slightly below the current value. Now move on to the multiples valuation model. We're looking for similar companies in similar industries to get to our P multiple, our average P, and we multiply it by the earnings per share. We've got Lowe's, Floor & Decor, and Leslie. We've inputted the stock price, earnings per share, got our P multiple, got our average, times by the earnings per share, and this gives us a stock price of $377.72. Again, a lot higher than the current trading price. Moving on to our third model, the dividend discount model, we input the yearly dividends, we look at the growth rate, and we can see an average growth rate of the last 5 years of 15.5%. Now, I've been quite conservative and forward-looking. I've gone for a 6% growth rate. What we're essentially looking to do here is to get the value of the next year dividend divided by the cost of equity less the constant growth rate. So this gives us a DDM price of $354, again significantly higher than the current trading price. Now, this is also the final model, the discounted cash flow model. We input the free cash flow for Home Depot over the last 10 years. We calculate the growth rate and we get an average growth rate of 8.44%. I've inputted a growth rate slightly higher than the average, but again in line with analyst estimates to be fairly in line with what they say for our forward-looking values. We then get our future free cash flows and our terminal value, which we use the discount rate to get to the present value of the future free cash flows, including our terminal value. We then add this together, add the cash and cash equivalents, less the debt, gets us to the equity value. We then divide by our shares outstanding, which is just over 1 billion, and we get to a DCF price of $292.31. So as you can see, when we come to our final page, we have our 4 valuation models that we've just run through with our 4 prices. We want to get the average to get the intrinsic value of $325.02. Now, what I would say here is we want to apply a margin of safety. I personally like to look at a 10% margin of safety. So this would mean that the buy price that I would be looking for is $292.52. If we quickly have a look here, we can see that this is well within the 52-week range. So it is not something that hasn't happened in the recent time. If you're someone who's a bit more conservative and we're looking for 20%, you'd be looking at $260. However, for myself, I'd be looking at $292. Now, Wall Street's price forecast for the next 12 months shows a price of $337.78. So we can see that there is at least around 15% uplift on the current price. So for me, this is definitely one that I will be looking to add. And I would say, for someone who's looking to include growth stocks in their portfolio, Home Depot is definitely one that you should consider. If you enjoyed this, smash the like button, smash the subscribe button. Let me know your thoughts in the comments and have a lovely day.